Hi, Dwayne Burnell back with you. Today I'm going to cover question number 2 of the most frequently asked questions. Here it is. Number 2, how much money do I need to retire? It seems like a simple enough question, but most of the financial advice out there is based upon the accumulation model. That is, the financial models and online calculators focus on how much do you need to save and invest to grow your nest egg so you can live off some portion of this amount when you retire. You're encouraged to act like a squirrel gathering nuts and hoarding them for the winter. Once the winter starts or you retire, you're supposed to ration out one nut at a time, so no matter how much or how little you have accumulated, you will last as long as the winter or your life does. The problem with this thinking is that it's lopsided. Accumulation strategy is really only one part of the retirement strategy. True, you need to accumulate money so you can retire. But asking the question, how much money do I need to retire, doesn't really prepare you financially for retirement. There are really 4 key questions you need to consider when you think about retirement planning. 1, the location of your money. In other words, in which financial products or investments do you have most of your money? It's critical to consider the strengths and limitations of your financial vehicles. For example, how much of your money could you convert to cash within a month? Will you face fees, taxes, and penalties to withdraw your money if you need it sooner than you've planned? 2, income reliability, longevity. How reliable is your retirement income? Could it disappear? For example, if rental income is part of your retirement strategy, what happens if you can't rent or renters damage your property? 3, risk. How much of your retirement is at risk for loss? What happens if you plan to get a significant percentage of your retirement income from the stock market and that market drops? Now what? 4, the impact of taxation. Often clients don't consider the impact of taxation. The theory goes that we'll all be in a lower tax bracket in retirement, so who needs to worry about this? But the reverse often happens. It's one of life's great ironies. You end up in a higher tax bracket in retirement because you have worked hard to pay off your house, all your deductions have moved out, and your 401k disbursements and Social Security benefits start to roll in. You have more income and fewer deductions. The IRS is happy. You? Maybe not so much. It makes sense to spend some time and effort understanding how you will live when you retire. Retirement planning doesn't have to be difficult, but it should be strategic. I work with business owners, families, and individuals anywhere in the country, and I'd gladly set aside 30 minutes to have a private phone call with you. I find this phone call is helpful for you and I to discover a little bit more about each other. I certainly will not try to sell you anything, and there's no obligation on your part. Think of this phone call as a way to see if we are a good fit for each other, a complimentary consultation, so to speak. So here's what you need to do next. For your convenience, I've included a button directly below this video. If you click on it now, you'll be taken to a short form that you need to fill out. It's just enough information to give me a clear picture of how I can best be of service to you so that no time is wasted during our 30-minute call. For those of you that would rather call my office directly, I've included my 800 number below. The form will take you no more than 5 minutes to fill out. So go ahead and click it now, and I'll talk to you very soon.